Once again, Assalamu alaikum everybody. This is kind of like a part two-ish to to what I already uploaded, and the reason why I have to make this video is because a lot of my friends and some people who've been asking me are about trading is how to get started once you figure out all of the things that you had to research about in your first video, in my first video, sorry. So the thing is, in this video, I'm gonna cover shortly, briefly about some of the tools, terminologies of trading. So when you're on a stock exchange, for example, you're trading stocks, uh, and when you trade the stocks or you trade your options, it's through a broker or your brokerage firm. So basically, a brokerage firm or your broker is the person, or basically, there are companies through which you can. I use the word basically a lot, sorry. Well, through which you can trade. First, you have to make an account with them, then, you have to fund your account. In case if it's a crypto exchange, then you either have to fund them in fiat like USD, pounds, or whatever, or you can, sorry, fund it through crypto. Some of the exchanges of crypto do not allow you to fund them in US dollars. That's why you have to purchase something like a stable coin. Stablecoin is a type of a cryptocurrency that is pegged to a dollar. So if USDC or USDT, they are being used to trade a crypto, then that means that one USDT or one USDC will represent $1. So in stocks, you trade through your brokerage, and you basically make an account with them, then fund your account, and then trade with them. So the stock market, for example, for US, it's open from Monday to Friday, 8:30 a.m. Central Time to 3 p.m. Central Time. And then there are some brokerages that offer aftermarket or pre-market trading. That means that once the market is closed or before it has opened, it gives you a few hours extra where you can close and open your positions when it comes to trading stocks. You cannot do that with options. Options trading is something else. Do not touch it if you don't know what it is, and that may be for some other time. But the options can only be traded Monday to Friday, only when the market is open. Sometimes the stock market is closed on some national holidays. And just like that, let's get into some of the technicals and terminologies of, because the previous video was about crypto, so this is about crypto as well. So when you have to trade crypto, you basically go to a crypto exchange. Very famous ones are Binance, Coinbase, Kraken, and the people who live over here in the US, they mainly use Kraken or Coinbase. Um, and then most of the people from Asia, especially from India and Pakistan, they use Binance. Well, India has banned crypto, so that's unfortunately. I'm not sure if they can use Binance again. Even if they do, that would be illegal. So don't do anything illegal. Um, Moving on, you make an account with a crypto exchange, for example, like Binance. Binance requires you to fund your account in USDTs. You have to basically purchase the USDT from somebody using dollars or rupees. There's a whole other process for it. There are many YouTube videos for that. You can Google them, YouTube them. They'll show you how to do that because it's gonna get a bit long if I get into those. Then after that, once you make an account, Then you have different coins that you can trade. For example, if you're gonna do regular trading in Binance, it's considered spot trading. So basically, that's just regular trading with a little bit of difference. Is that a spot means that you're exchanging a crypto for another crypto to buy or close your position on it. Closing or opening your position means closing or opening a trade, entering or exiting, buying or selling. That's basically what your opening or closing a position is. So, in spot, you basically, if you have Ethereum or Bitcoin, for example, you can use your Bitcoin or Ethereum to buy another cryptocurrency, which you either want to long or short. Long means you bought it so that you are gonna sell it when the price goes up. And going short or shorting is when you believe the price of the asset is going down. So if it goes down, then you make money on that. And because for US people, they can easily buy through Coinbase using US dollars. It's easier for them. But for people, for example, in Pakistan, they who are using the Binance account, they mostly use Binance, and that's the because it has the most coins. Also, remember it has also a lot of risky coins as well. So know what you're trading. Take a good reading out of or an observation out of the previous video that I made. What kind of projects to select or not, what kind of coins to select or not, what's the criteria and method through which you do that. So, uh, where were we? Yeah. So this is like in spot, you're basically exchanging one crypto for another to close or open your position, to enter or exit a trade, to buy or sell. In this case, USDT and USDCs are used. Binance uses USDT, which is Tether, based on the Ethereum blockchain, I believe. Yeah. And so basically, it tracks the value of a dollar. One USDT will always be equal to $1. Moving on. Um, to get USDT, as I told you, there's a process for it. You can use USDTs to buy almost all of the major coins. They will come in pairs like BTC slash USDT, means that you can buy Bitcoin or you can short it by funding or using USDTs as your purchasing tool. US people can of course purchase it through US dollars, and there are some coins like you know that they require that you cannot just buy them from US dollars anyway. You must have to fund buy them through either USDC or USDT, and every exchange is different in what they're offering, how you convert, how you fund it. And once you're making there are many YouTube videos and tutorials how to create an account on Binance, how to fund it, and etc. So we're not going to get into that. It's very easy. Even if you're not understanding or anything, you can obviously inbox me once again to find out exactly how to do that process, and I'll try my best to guide you. Then what happens is that we have uh, the main reason why this video is being made is to tell people what are um, what are the terminologies on buying and selling. So there on the charts, for example, you have of course there are different types of charts: bar graphs, candlestick charts, line graph charts. Professionals tend to use candlestick charts. It's been a phenomenon going on since 300 years from a Japanese person who I forgot the name of, but he was trading in the commodities market and and he created the candlestick pattern basically, which people are still to date using it. Uh, and I'm not gonna get into what the candlesticks represent because that's there are many YouTube videos on it already. So search that. After that, there are indicators you can put on the chart. So there are different types of indicators like RSI, MACD, moving average, VWAP, and all of these things. They help you basically, Fibonacci's, Bollinger Bands. They basically help you determine the price action in medium to short term, or sometimes even in long terms. Usually, when we're making a long term investment, we don't really look at it like all the time. We just look at it a good amount of times just before we invest our money into it. Sorry. So, these are the things on the charts. And then the most important part is the types of orders. The types of orders, there are three major types of orders, at least three major that you should be aware of. Familiarize yourself with them using investopedia.org.com. I put that link in the description of my previous video. I'll put it in this one as well. So there are three major types of orders. What are those? Number one is the market order. And in the market order, there's a market buy order and there's a market sell order. So a market order or a market sell order gets completed on the market price. If you're pressing the buy button on a market buy order, then whatever asset you're going to purchase, you're going to be getting the price, which is the current market price live that is going on. And same with selling on a market sell order. If you market sell your thing, your trade or your order is going to get completed on the market price, whatever the current market price is. So remember, the order getting completed, executed, filled, or triggered all means the same thing. It just means that your order has been completed. Then we have the second famous type of order, which is the limit buy order or the limit sell order. In the limit buy order, you enter a price of your own choice at which you want to buy that thing. For example, if Bitcoin right now is at around $48,000 something, then you say, no, I'm gonna only buy it if it hits 47. So unless it hits 47, your order won't get triggered or filled or executed or completed. Same thing. So basically, you're putting the limit price in that limit order would be the price at which you want to buy it. And then you have some advanced options in it that you want to there's a time when you want to cancel the order, like the most famous is GTC, which means good till canceled. So once you click your limit order button, it's gonna your order is gonna expire. If it's a good for day order, it's gonna expire in a day. Then, but if it's a good till cancel order, then unless you cancel your limit order, it will stay in the system. And once it hits the limit price at which you want to buy, the system will automatically purchase that thing for you. Similarly, with limit sell order, you enter a higher price than, well, if you're shorting it, then it's an opposite. Of course, do the vice versa. But in a limit order, limit sell order, when you sell something, then you obviously enter, especially when you're going long, you enter a price at a higher price than what you've obviously bought it at. So if you, for example, bought Bitcoin at 47 and you have it, then you want to place a limit sell order, then your limit sell order will only get executed or filled or triggered only if it hits the limit price at which you set it. For example, Your limit order, you bought it at 47, you feel like selling it at 50, you enter the limit price as $50,000, and then your limit sell order will only go through if if it hits that price. Your order is automatically gonna get sold at the limit price if it hits. One thing about the limit orders, sometimes the order does not get completed even if it hits uh, that price which you wanted to sell it at. So I'm gonna more on that in a bit later. Then the third most famous type of order, which I recommend using, especially in the crypto market, is your stop loss order and stop limit order. So, in a stop loss order or a stop limit order, what happens is that stop loss order literally means stopping the loss. So, in a stop loss order, what we do is that we want to exit the trade uh, without taking a loss more than what the price that we specified in the order. For example, by the way, if the Bitcoin is at $47,000, it doesn't necessarily means you have to put $47,000 in to purchase it. You can purchase a portion of it even for $1 to $100, $50, $5. But if Bitcoin moves 1% up, then your $5 will only go up 1%. If Bitcoin goes down 1%, then your $5 will go down 1%. So, for example, um, you bought Bitcoin at $47,000, whatever amount you purchased, $100 or 500 or whatever, according to your own capacity. You feel like I'm going to sleep. I don't have time to manage my portfolio all the time. So your portfolio, all your holdings or your positions are the things that you have currently bought, and they're in your position, your open trades right now, your open holdings, basically what you have in your account. So what happens is that you feel like I can't keep up with it. I have to go to sleep. I have some other things to do. But you have entered the position, you have entered the trade at a time or at a riskier price point, which you feel like, okay, it may go up, but it can also very well go down uh, to a very bigger level, and I'm gonna sleep, so I don't know what's gonna happen. So what you do is you place a stop loss order. The advanced form of stop loss order is the stop limit order. More that in a bit. In the stop loss order, you enter a stop price. For example, you bought Bitcoin at $45,000, and you say that if it goes down to $44,000, then sell it for me. You can enter either a percentage or a value of on which the asset has to fall below, and then when it hits the stop price that you set, it will automatically sell it for you, convert it into a market order. The system will automatically sell that thing for you without you having to take a further loss than the amount that you have specified. For example, I bought $100 worth of Bitcoin, and at whatever price of what the Bitcoin was at that time, and then you feel like, okay, I've bought $100 worth of it, and I can only uh, afford 5% loss on this trade. It depends on you how much percentage you are comfortably feeling with losing on a trade. So for example, you go like, I cannot afford more than 5% loss on it. So what you do is you enter the stop price. For example, if you bought it at $45,000, and then do the 5%, calculate the 5% decrease in it, put that value in it as the stop price. So when it says the field of the stop price, then you enter that amount, that from that point below, you are not gonna take any further loss. So you're saying that you bought $100 worth of Bitcoin at $45,000. You cannot take more than a 5% loss. So calculate the 5% value of um, that trade of Bitcoin, subtract it from your stop price, and then that would be your percentage. Basically, you bought $100 of Bitcoin, you say you cannot take a 5% loss. So if Bitcoin goes down 5%, then your $100 become $95. And then the system automatically lets you exit out of the trade even in your sleep if you have set that order. It's gonna make you escape further loss on your order, on your basically position, because you opened it, you were busy, or you didn't want to manage it anymore, or whatever. So it exits you out from that trade. That is the stop loss order. The modified form of that order is stop limit order. And in a stop limit order, what basically is happening is that you have set a stop price to, for example, you had it for at $45,000. You feel like I'm gonna exit at if it hits 44,000. Sometimes when it hits 44,000, it doesn't necessarily keep on further dropping. In at least half of the times, what happens is that if it goes down to $40,000, it's gonna be 41,100. Goes down to from 45 to $44,000. What can happen is that it can bounce back to $44,100 or $44,200. So in some cases, it's just gonna keep on going down. That's a scary situation, actually. And but half of the times it bounces back a little bit up. So in the stop limit order, you will set the stop price at which your order will start functioning. For example, your stop price is $44,000 and the stop limit price is $44,100. So if Bitcoin hits, for example, $44,000, that is your stop price, then it will only sell it for you if it hits back at $44,100, and that is your stop limit price. So your stop price was $44,000, and your stop limit price is $44,100. So your order is gonna start getting activated if Bitcoin hits $44,000, and then if Bitcoin bounces back $100 more, then it will sell it at $44,100. If it seems complicated, then once again, there are countless videos out there to explain you what are stop loss orders and what are stop limit orders. Basically, they're designed to um, stop you from having more loss than what you can afford. And then there's a stop trailing order. Um, well, not gonna explain that in this video because you don't want to mess with it unless you're day trading or constantly trading. And I recommend first to get familiarized with all of these major three types of orders before you go on, which are stop loss, which are market order, market buy, market sell, limit orders, limit buy, limit sell, then stop loss order, stop limit order. Most of the cryptocurrency exchanges, they do not offer something as simple as a stop order. They stop loss order, they give you a stop limit order. And then there are more advanced types of orders like stop trailing order and stop buy order, which you don't want to get into right now. In the starting of explaining the orders, I mentioned that sometimes your limit order does not get triggered. So you need to understand is even in the stock exchange or the cryptocurrency market, what happens is that basically if many people are buying, the price of that asset goes up. If many people are selling, then the price of that asset is going to go down. And if the selling and purchasing is of the same amount, then the price is gonna stay in the middle of that asset if there are equal amount of buy orders or sell orders. That's why the market is constantly fluctuating. So what happens is, for example, if there's a company and there are 100 shares of that company, I give this example to everybody, that and then a big shark, a big whale comes, investor number a investor, big whale investor comes. He goes like, okay, there are 100 shares of a company, for example, available in the market, and he buys 50 shares of it. That means he has taken a big chunk of the market, and each share's price is $1. So he buys 50 shares at $1 each. Then that $1 of each share that he bought, once he buys it, then the as soon as he presses the buy button, then because he has taken 50% of the chunk of the entire available shares of the market, then most likely that share will go from $1 to $2 or 1.4 or 1.3. The point is it's going to increase if somebody is buying heavy into it. So next day he thinks like, oh wow, my $50 of investment has turned into $100 or $75 or $80. So the only way he can make profit is selling it. So when other people look at somebody buying something really heavily, they go like, yeah, I want to buy two. I want to buy two. Like Tesla purchased $1.5 billion of Bitcoin. And then other people were like, yeah, let me buy two. That's exactly what happened. So he buys it, and then he feels like, okay, I've made enough profit. I want to sell it. Sorry. As soon as he presses the sell button, and he gets rid of all of his 50 shares, he's gonna make the profit what he has, but then that price of the share, if it was at 1.6, $2 or 1.5, is gonna start crashing down to $1. And of course, when people will look at the big guy selling, and they're like, we should sell too before we get into a further loss, and then they're gonna start selling too. That is called panic selling. That will decrease the price of the asset to even a further degree, and the market for that asset can crash because he sold it, because the price goes up or down based on the demand and supply rule. If the demand is a lot and there's a lot of buying going on, then the value of that asset is going to increase. If the selling is too much, then the price of that asset is going to decrease, because now there is a lot of supply available and there are not many buyers. So the thing becomes cheaper. It happens with crypto, it happens with stocks, or any other thing in the market. So moving on, that's why. So this is something I had to tell you before I tell you sometimes why don't the limit orders get through, especially the limit sell order. So for example, you bought Bitcoin at $45,000 and you want to sell it at $50,000, and Bitcoin sometimes jumps $8,000 in a day. It has happened a few times. So for example, from 45,000 it went up to 50,000, and that's what your limit sell order was placed at. And you go like, oh, why the hell the order did not get executed? uh, it it hit 50,000. Why isn't it automatically getting sold? The answer to that is that there's no buyer in the system who's stupid enough to buy it at $50,000, because obviously people want to buy low, buy low and sell high. So if there is no buyer in the system that wants to, that has put a limit buy order at $50,000, then your limit sell order is not going to get executed. That's because nobody's stupid enough to buy it at very high valuations. So sometimes you have to quickly cancel your limit order if it's hitting your target, and then you market sell it. Because the market sell order is going to get completed regardless of if there's a buyer in the system or not. And then what happens is that, let me think. So what's basically happening is that your limit order did not get executed because there was no buyer in the system present who wanted to purchase it at $50,000. So you can immediately cancel your order and do a market sell, because your market sell is going to go through regardless of the situation, unless the system is malfunctioning or there's some other weird thing going on. And what you can do is set up alerts. There are many apps like TradingView that I gave the link of in the description of the previous video, that in alerts what happens is that when a price of an asset reaches to a certain value that you entered, it's gonna give you a notification that this is the price right now. So then you can quickly sell it. Remember that cryptocurrency is a 24/7 open market, so it's gonna consume a lot of your energy. So be careful on that. And then what else? Let me think. I think that the last thing I would like to mention is leverage. What happens in leverage is that there are coins that say BTC multiplied by 5 or BTC multiplied by 10, or you can open a regular position and enter multiply by 3 leverage or multiply by 2 leverage. So what happens there? That is a risky and dangerous type of trade, only meant for professionals, or when you're 100% sure that from this point to that point the price is definitely going up or decreasing, and you cannot always bet on it unless you have entered at a very safe price point. So for example, in leverage what happens is that if you, for example, buy Bitcoin multiplied by 2, BTC multiplied by 2, or if you bought Bitcoin and entered leverage multiplied by 2, then if Bitcoin goes up, Bitcoin I'm using it as an example, it can be anything. So if Bitcoin goes up 1%, your position is gonna go up 2% because you selected multiply by 2 leverage. But if Bitcoin goes down 1%, then you go down 2% because you selected multiply by 2 leverage. That can result in liquidation of your all of your portfolio. The exchange sometimes does is that if it goes down, for example, you bought $100 worth of it and your leverage was multiplied by 10, and it decreases and it goes down to a very significant percentage, that completely wipes out your $100. Then and then if you don't have more money in your trading account, then you owe them money basically. Then your account balance will go in negative. So that's why leveraging is kind of dangerous. Don't mess with it unless you know what you're doing. And that's why I prefer leveraging only for those who are professionals, or only if they know what they're doing. You can have leverage either on a short position or a long position. Remember your holdings or your positions or your current assets that you hold. Uh, these are some of the basic terminologies and tools that I wanted to cover in this video for people who want to know, okay, how we buy and how we sell. So I guess that's about it for this time. And if there's anything I'm missing out, I'm trying really hard to uh, think what more I can be telling you guys. But yeah, I guess that's about it. And then if there's anything I'm missing out, or if you feel like you have further questions, comment and let me know, and I will try to address that point. For now, knowing what an exchange is, how the prices go up and down, what basically happens, what are indicators, and then what is leverage, what are types of orders. You need to master all of that, or get enough familiarized with that before you make any decision of putting actual money in it. You can do paper trading or virtual trading. So there are some softwares and apps available that let you trade with the real market using fake money. That's just for you to practice. So I would rather suggest, if you really want to do this, then first try paper trading, because you don't want to lose your actual money. uh, of course not. So as much as my money is important to me, your money is important to me as well, and I would feel really bad if you lose any of it. That's why I do paper trading or virtual trading. There are softwares and apps that allow you to do that. Basically, it's just a simulator in which you are having fake money to interact with the real market. So I guess that's about it. And thank you very much for your time. And I believe that's all. And I pray and hope that you get successful in what you're doing and your future investments and trading. And I would expect you to pray for me as well. Thank you. Allah Hafiz and bye bye.